All right, it looks like we've hit critical mass, so we're going to go ahead and get started. Thanks to all of you for taking time out of your day to join us. Just a few housekeeping notes before we begin. This workshop is being recorded, and everyone will receive a copy of the recording following today's session. So if you have to step out early or you lose track at some point, no worries, everyone will receive a copy of today's session. That being said, I want it to feel as interactive as possible. So I encourage you to put any questions that you might have in the Q&A. I'll be pausing periodically throughout the webinar to go through and address as many of those as I can out loud. And then if you need to enable closed captioning or live transcription during this webinar, I'm going to be posting a link in the chat with instructions on how to enable this feature on Zoom. All right, a quick look at the agenda that we're going to cover here today over the next hour. First, some brief introductions. I'm going to introduce myself and who we are here at Savi and our partnership with NYU Langone. And then we're going to dive into the good stuff and talk about some of the student loan basics or student loans 101. These are the most important topics that you should be familiar and aware of as a student loan borrower. So that will include things like repayment plans, forgiveness programs, and some of the latest policy updates that have been coming out of the Department of Education. And then we're going to transition the last part of the presentation to talk about getting started with Savi. Savi is a technology resource and a human service that can help all of you successfully navigate around your student loans. So we're going to make sure that you all have access to that and can navigate through that tool and set up your account. So my name is Lindsay Clark. I'm the Chief Borrower Advocate and Director of External Affairs here at Savi. I've been with Savi since the very beginning, and I'm a student loan borrower myself. I have a little over $200,000 in student loan debt. So if that makes any of you feel better about your own situations, then mission accomplished right off the bat. But all to say that I have become a student loan expert over the years, and I lead all of our consumer education and workshops on a daily basis. So I give multiple of these sort of presentations every single day across the country to a variety of communities of borrowers that we work with. So I'm really excited to be able to share some knowledge with you here today and help you leave this presentation feeling a little bit more at ease about your student loan debt, but again, introducing to you the Savi resources at your disposal, thanks to NYU Langone. Just a bit more about who we are here at Savi, because you might be less familiar with us. Savi is a social impact technology startup based in Washington, D.C., and we were founded by student loan experts and advocates who had been fighting on behalf of the borrower for almost a decade. And in 2017, this was the first year that borrowers could start applying for a program called Public Service Loan Forgiveness, which you are all eligible for. And we're going to talk about that a little bit later on in the presentation. But all to say that over 100,000 people applied and 99% were rejected. And again, we'll go into some of those details in a little bit. But our co-founders saw this and decided to do something about it. So they created Savi as a technology platform and a service to help borrowers like you and like me not only better understand our student loans, but to successfully navigate from start to finish around some of these really complicated government programs. But along the way, our goal is to make the experience of being a student loan borrower a better one. So that includes, that includes trying to help you get additional savings at any point along the way. All right, so we try to do this. Ooh, hold on one second, guys. I'm having some technical difficulties. Give me 1 second. Sorry about that, guys. I sincerely apologize. For some reason, my mic turned off. All right. Anyway, as I was saying, we try to help you identify as much additional savings as possible along the way. And that's by enrolling in things like income-driven repayment plans. We are a public benefit corporation, which means it exists in our mission and charter to serve the public benefit. And that's exactly why we do things like this here today. We host educational webinars and workshops almost on a daily basis to help borrowers not only better understand their student loans, but to navigate successfully from start to finish around these programs. And with that, why we're here today is because we are working in partnership with your employer, NYU Langone, to offer you an exclusive student loan benefit around your student loans. We work with a variety of amazing employers, organizations, et cetera, across the country to help their communities of borrowers cross the finish line around forgiveness programs and lower their monthly payments. And that's exactly what we're trying to do here with you all today, is really help you achieve the best outcome possible for your student loans. So this is exclusive to you all in the NYU Langone Health community. And Savi is available to not only you, but your family members as well. So that's a big plus here. I know many of us, if we have student loan debt, our family members have student loan debt as well. So I want to make sure everyone is aware of that as well. All right, so we're going to dive right in here to some of the basics around understanding your federal student loans. So some of the topics that we're going to cover in this section include student loan servicers, what they are and what role they play in repaying your student loans, the different types of federal student loans out there. This is a big one and very important because the type of federal student loan that you have is going to determine your eligibility for certain repayment and forgiveness programs. So we'll go into more detail on that in just a bit here. Then we're going to talk about income-driven repayment plans, or IDRs. These can be a powerful way to help lower your monthly payment. And so we're going to talk about what's involved and the different types of income-driven repayment plans out there. And then we're going to wrap things up by talking about public service loan forgiveness, or PSLF. This can be one of the most powerful ways to have your student loan debt forgiven entirely. And as employees of NYU Langone Health, you are all eligible for this program. So again, we're going to go into more detail on that in just a bit. All right, first up, let's talk about student loan servicers. So some examples of student loan servicers appear on your screen right here. Great Lakes, Mohila, Nelnet. Now, not all of them appear on your screen, so don't worry if you don't see your federal servicer, don't be alarmed. We just put a few here as examples. But these are companies that are contracted by the Department of Education in the repayment and management of your student loan. So this is the account that you're going to log on to. You'll see what your monthly bill amount is. You'll be able to make that payment online. So that's sort of the day-to-day management of your student loan. Now, just to clarify, Savi is not a servicer. So you would never start making your student loan payments to Savi. You can kind of think of us as an intermediary or an advocate on your behalf. So what we might do is submit an application to your servicer on your behalf. Or we might get on the phone with you and your servicer to resolve an issue. But we are never taking the place of that servicer. We're simply trying to reduce the friction that a lot of borrowers experience with their servicer. All right. Now, that being said, it's important that everyone know what student loan servicer they have, especially because over the last couple of years, many of these servicers have moved around. Some are no longer supporting federal student loans. And what that's meant is that those borrowers have had their loans to other servicers. And so that's exactly why it's important to know what type of servicer you have and make sure that your contact information is fully updated with that servicer. That way they can communicate with you upcoming changes or changes to your account and things like that. So again, you want to make sure you know what servicer you have and you want to make sure that contact information is updated. Where can you find out what servicer you have? By going to studentaid.gov. And I will put that in the chat for everyone to see, studentaid.gov. This is the official website of the Department of Education and where you can log in using your federal student aid ID, and you'll be able to see right on that dashboard exactly what servicer you have. All right, let me take a quick peek in the chat to see if there were any questions. I know I'm joined by two of my colleagues here because we have a lot of you on today that are going to be helping me with Q&A, but it looks like they've got it covered. So I will continue chugging along here. All right, now we're going to talk about the different types of federal student loans. And again, this is one I would really pay attention to because the type of federal student loan you have is going to determine your eligibility for certain repayment and forgiveness programs. So we're going to start on the left side of your screen here with direct loans, and then we're going to work our way over and briefly touch on private loans at the very end. So let's start with direct federal loans. The direct federal loan program began around 2010. So if your loan was dispersed from 2010 to present day, there is a very good chance it is a direct federal loan. This includes direct subsidized, direct unsubsidized, and even direct consolidation loans. The easiest way to tell if it is a direct loan is it will literally say the word direct in that loan title, or it will say DL, which stands for direct loan. Now, the good thing about direct loans is that they are pretty much eligible for all the programs we're talking about here today. This includes things like income-driven repayment plans and the big one, public service loan forgiveness. So if you have direct loans, you are in the clear. Moving along to FFEL loans or FFEL loans, which stands for Federal Family Education Loans. Now, this was the loan program in existence prior to direct loans. So if you have a federal loan that was dispersed before 2010, there's a very good chance it could be a FFEL loan, right? These come in the form of FFEL subsidized, FFEL unsubsidized, and even FFEL consolidation loans. Now, here's the thing about these FFEL loans. In order to be eligible for all the different types of income-driven repayment plans, as well as public service loan forgiveness, you will need to consolidate that FFEL loan into what's called a direct consolidation loan. Now, consolidating is not to be confused with refinancing. Consolidation is a free federal process by which you are basically creating a new direct consolidation loan out of an existing older loan type like a FFEL loan. So again, to reiterate, if you have one of these FFEL loans, in order to be eligible for those forgiveness programs, you will need to consolidate that loan. And I will show you a little bit later on in the presentation. This is something Savi can help you identify and cross the finish line around that consolidation. All right, moving on to PLUS loans. PLUS loans come in two varieties, Parent PLUS loan and Grad PLUS loan. So let's start with Parent PLUS loans. You know, many people think the student debt crisis is a young person's problem, a millennial issue, when in fact, the fastest growing demographic of student loan borrowers is actually ages 50 plus, and it's parents taking out loans for their kids. And that's exactly what a Parent PLUS loan is. It's a loan taken out by a parent on behalf of a child, but in the parent's name, okay? Now, when it comes to these Parent PLUS loans, just like the FFEL loans I spoke about, they require consolidation in order to be eligible for programs like public service loan forgiveness and income-driven repayment. So if you have a Parent PLUS loan and you're interested in pursuing those programs, you will need to consolidate that loan. All right, now on to Grad PLUS loans. So Grad PLUS loans, as the name might imply, are loans given to graduate or professional students. And these loans are eligible as is for programs like income-driven repayment and public service loan forgiveness. So they require no corrective action like consolidation in order to become eligible, all right? So if at this point you're already starting to get a little confused, there have been a lot of acronyms mentioned, that's totally normal. And it just goes to show you how overwhelming this system can be. But here is the most important takeaway from this section. Identifying what type of loan you have, federal type of loan you have, that is important because it will determine your eligibility for these programs. And if you have a FFEL loan or a Parent PLUS loan, you will need to consolidate that loan into a direct consolidation loan in order to qualify for those programs. So again, really important to just understand what type of loan you have and the fact that you may need to take an extra step of consolidation in order to be eligible. And again, this is something that the Savi tool can help you to identify, and our team can help assist with that consolidation as well. Now, before I move on, I just wanted to briefly touch on private loans. Now, private loans are obviously non-federal loans made by a lender such as a bank, credit union, state agency, or a school. All right. Now, these loans, unfortunately, are not eligible for any federal repayment, forgiveness, or relief programs. And there's no corrective action like a consolidation that you can take to make them eligible. Right. So some examples of private lenders might include Wells Fargo, SoFi, Discover, entities like that. Again, those loans are not going to be eligible for any of the federal programs we're going to talk about here today. But I know a lot of borrowers out there have private loans or a combination of federal and private loans. And as far as your private loans go, if you are struggling with those, I would highly encourage you to reach out to your individual lender, because there's no federal system sort of overarching all of the private lenders, right, where they all must abide, like there is for the federal system. So private lenders can do what they want. And so if you're interested in seeing what repayment options might be available, any forbearance options, things like that, the best bet is to reach out to your individual lender and see what options you might have available to you. All right, before I go on to income-driven repayment, let me see, are there any questions? Oh, it looks like our team is already answered 20 so far. Okay, keep them coming, guys. I appreciate it. And we hope this is helpful so far. And we're going to keep chugging along. All right, now we're going to talk about income-driven repayment plans, or IDR. So before I dive into this, let me back up and give a bit of context on just general repayment of your student loans. So there are two basic ways to repay your student loans. You can repay them on what are called the standard plans. The standard plans base your monthly payment on your debt amount. So the higher your debt, the higher your monthly payment. For someone like me with a little over $200,000 in student loan debt, on a standard plan that estimates I'm going to pay that off in 10 years, my monthly payment comes somewhere close to $2,000 a month. It's absurd. The Department of Education realized that many people could not afford their monthly payment on a standard plan. And so they introduced what are called income-driven repayment plans. And instead of basing your monthly payment on your debt amount, they base it on your income and your family size. Okay. And what that helps to do for a lot of people, especially those with a high debt to income ratio, is lower that monthly payment. So there are four primary types of income-driven repayment plans. There's the SAVE plan. This is the newest plan, formerly known as Repay. There's the PAY plan, pay as you earn. There's income-based repayment. And then there's income contingent repayment. All right, so those are the four different types of income-driven repayment plans, and they all fall under the umbrella term of income-driven repayment. Now, generally how these plans work is this. They cap your monthly payment at anywhere between 10 to 20% of your discretionary income. Now, that's sort of a fancy way of saying your adjusted gross income, or your AGI. So this is going to be before taxes, right? So just to give you an example, let's say you are single with no dependents and an income of around $52,000 a year. On an income-driven repayment plan, that's going to come out to around $160 a month, all right? Now, for every child dependent that you have, that's going to lower that monthly payment by about $50 per child. Even unborn child dependents count, right? So that all helps to lower your monthly payment. All right, now, here's another thing. If you are under a certain income level, you could be approved for as low as a $0 monthly payment, all right, based on your income. And those $0 monthly payments count towards forgiveness programs like public service loan forgiveness. So even though you might be paying nothing each month, that would still count. Now, another thing about income-driven repayment plans is that you are eligible to have your remaining balance forgiven after 10 to 25 years of payments, all right? This is tax-free forgiveness until 2025. Otherwise, it's considered taxable income. Now, here's how the process works to enroll in these plans. There's an application that you have to submit to your servicer, one of those federal servicers that we talked about, and you must attach supporting documentation attesting to your income. This can either come in the form of your most recent tax return or a pay stub from the last 90 days. All right. Now, this gets submitted to your servicer. Your servicer reviews this information and says, okay, Lindsay, you're going to be paying $160 a month. And it locks in that payment amount for the next 12 months. 12 months comes and goes, and you have what's called a recertification deadline. And by that deadline, you need to essentially resubmit that application with updated income documentation. Your servicer will review that payment amount and say, okay, Lindsay, now you're going to pay $170 a month. And it locks that in for 12 months. So on these income-driven repayment plans, depending upon any variations or fluctuations in your income and family size, that payment amount could go up or down from year to year, but it's locked in for those 12 months, right? But you need to make sure that you are submitting that application by that recertification deadline in order to maintain yourself on the program, right? So that's essentially how those work. Let me take a quick peek at the Q&A to see if there were any questions to my team. Are there any questions I might be able to answer out loud that you see sort of commonly coming in?
I think we are all set over here. Oh, one thing I think a common question is, can we get a recording of this? And yes, we will be following up tomorrow with a copy of this recording in our follow-up email.
Awesome. Thank you, Ellis. All right. Now, I wanted to talk a bit more about this new SAVE plan. This was the newest and latest income-driven repayment plan introduced by the Department of Education last summer. And anyone with direct loans is eligible for this SAVE plan. That excludes, however, Parent Plus loans. Okay, so Parent Plus loans are unfortunately not eligible for this SAVE plan. Even after consolidation, they are not eligible. However, there are a couple things about this plan that make it the most affordable of all the income-driven repayment plans to date. First off, any unpaid interest will essentially be subsidized by the Department of Education, so that regardless of how little you might be paying each month, and it could be as low as $0 a month, your loan balance will not increase, right? Now, I'm sure many of you can relate to this, and feel free to raise your hand if this is the case, that you've been paying on your loans for years, if not decades or more, and your loan balance is actually, it's not lower, it's actually higher than when you started. I can certainly relate to this myself, and that is because of capitalized interest. Yep, I see a lot of you raising your hands. That's because of capitalized interest. And so what this plan will do is prevent that from happening. Unfortunately, it's not retroactive, meaning any interest you've accumulated thus far will remain, but at least going forward, you can be assured that that balance will not increase as a result of that interest. So that is one new great benefit of the SAVE plan that's only available under the SAVE plan. Another thing about the SAVE plan is that it raises the amount of income considered non-discretionary, so that no borrower making under 225% of the poverty level will have a student loan payment. So that's about $15 an hour, about $33,000 to $35,000 a year. Now, let's say you're making more than $15 an hour. Well, you will also see your payment reduced as well, since less income will be included when they're calculating their payment. So that is what's gone into effect so far for the SAVE plan. Another thing that is going into effect come July on this plan, July of this year, is that they're going to reduce the percentage of discretionary income to 5% for undergrad loans and 10% for graduate loans. So borrowers with a mix of undergrad and grad will have a weighted amount based on the loan types and balances. So it'll come out somewhere between 5 and 10%. So that's sort of an overview on the SAVE plan. All right, now we're going to talk about public service loan forgiveness, or PSLF. This is really the reason why we're all here today, because as employees of NYU Langone Health, you are all eligible for this program. And it is one of the most powerful ways to have your student loan debt forgiven for public servants such as yourself. So we're going to do a deep dive into exactly what's entailed in this program, how you can qualify and apply. And again, Savi is going to be with you every step of the way to help make sure that this happens. So public service loan forgiveness, or PSLF, is essentially full forgiveness on the remainder of your loan balance, whatever that may be. It could be $5,000, it could be $500,000. It doesn't matter. Tax-free, so there are no federal tax implications here. after you have made 120 qualifying payments. Now, what constitutes a qualifying payment really comes down to these three things that you see on your screen right here, and that you must satisfy simultaneously. We'll start on the left here with number one, qualifying employment. You must work for any government organization at any level, federal, state, local, or tribal, or any non-for-profit 501c3. NYU Langone Health is a qualifying employer. The only stipulation here is you must work a minimum of 30 hours or more per week. Now, you can combine multiple part-time employment to qualify. So let's say maybe you work part-time at NYU Langone and maybe part-time at another hospital. So long as both employers are qualifying, and so long as combined you work a minimum of 30 hours or more a week, you can qualify for public service loan forgiveness. Right? Another thing to note about the employment, it is retroactive going back to October 2007. October 2007 is when PSLF was written into law, meaning any qualifying employment that you've had from October 2007 to present day is fair game. Unfortunately, anything before October 2007 does not qualify, but anything during that period can count. So if you've worked for 4 different qualifying employers over the course of that time, all of those count, right? So it doesn't need to just be with one employer. You can have multiple employers over that period of time. So that's number one, qualifying employment. Number two, you need to have a qualifying loan type. And the only types of federal loans that qualify are direct federal loans. So this is why I emphasized this so much in the previous slides when talking about loan types. You need to have a direct federal loan in order to qualify for the program. Now, let's say you don't have a direct federal loan. Maybe you have a FFEL loan or a Parent Plus loan. You will need to consolidate that loan into a direct loan in order to qualify. All right, so that's qualifying loan type. And the number three, qualifying repayment plan. You need to be making a payment on that loan on a income-driven repayment plan. It doesn't matter which one. It can be any of the 4 that we talked about. And that payment should be on time and for the full monthly amount, right? So you need to satisfy all 3 of these things in order to accumulate a qualifying payment credit. So a little bit more about how this works. Again, you need to make 120 payments meeting all 3 of those requirements, okay? So each payment needs to be made while working in public service, on your direct loans, and while enrolled in an income-driven repayment plan. Now, after you've made those 120 payments, your remaining balance is forgiven entirely. So again, whether that's $1,000 or $100,000, that remaining balance is forgiven and it is not taxed at the federal level. Now, a couple of common misconceptions about public service loan forgiveness. The payments you make do not need to be consecutive. They just need to be cumulative. So you just need to make 120 total cumulative qualifying payments. So let's say you made 60 payments, right, working for a qualifying employer, but then put your loans in forbearance for a year, or maybe you worked for a private employer after that. Well, when you resume your eligibility or resume making payments, you'll be able to pick back up where you left off. So pick back up at that 60 and continue your progress to the 120. All right. So again, they do not need to be consecutive. However, you can only receive 1 qualifying payment credit for 1 calendar month per 1 payment, meaning in any given calendar year of 12 months, the maximum amount of PSLF credits that you can receive is 12. So if you have to get to 120 total, right, you can only receive 12 a year. You are all very smart people. That means that the minimum amount of time it would take to get to that 120 would be 10 years, right? So that's why many people describe this program as a 10-year program. But I would encourage you to think about it more so in these 120 payments, because if you're not making them consecutively, if your work history is not consecutive, it could very well take you longer than 10 years to cross that finish line, all right? So you can't double up on payments in a month and get double the amount of credits, or you can't make a big lump sum payment and get more credits than you normally would. At minimum, the earliest it will take you to achieve forgiveness here is 10 years. 1 payment per month is how you can think about it, right? Now, how do you apply for public service loan forgiveness? Well, the good news here is that there is 1 form and 1 form only. and it is called the PSLF Employment Certification Form. This form needs to get signed off by you, the borrower, and then it needs to get signed off by your employer, any current or previous employers you might have had. So let's say I've worked for 4 employers total, including my current employer, that qualify. I will need to submit 4 employment certification forms, for each of those employers. All right. So again, that needs to get signed off by you, submitted to your employer, HR, to sign off and certify your employment for that period of time. And then that needs to get submitted to MOHELA. MOHELA is the sole servicer in charge of public service loan forgiveness. All right. So even if MOHELA is not your servicer, those forms need to get submitted to MOHELA in order to be reviewed. And then if you are accepted into the program, your loans will actually move over to MOHELA for management. So that happens automatically after you submit those forms. Now, after submitting your first round or initial employment certification forms to get credit for payments you've already made, all right, so those are sort of retroactive. Going forward, every 12 months, it's in your best interest to submit that form. MOHELA will review it and then award you those credits. If you wait until you think you've reached the 10 years or 120 payments, it's more likely that errors are going to occur when they're reviewing your forms. They've got a lot of repayment and work history to go back through. We also see a lot of delays happening when forms take that long. All right. So again, submitting a form each year allows you to track your progress and ensures you're getting credit for every one of those payments. All right. Cool. We're going to take a quick pulse check here. I just want to make sure everything is looking okay in the Q&A here from my team. Anyone have any questions that you think might be helpful to answer out loud? Let's see. Someone asks, if you no longer work for an employer, do you still need to submit it to the former employer before it gets submitted to MOHELA? Yes. And this is where it can become a slog of a process for many borrowers. And this is exactly where Savi comes in. But yes, even though you're no longer working for that employer, you will still need to submit that form to your former employer, have it signed off before it gets submitted to MOHELA. And I'm going to show you how Savi can help you manage that entire process, because I know that can be probably one of the most difficult parts of navigating this on your own. All right, the last section here, I know that this has been a lot. Thank you all for bearing with us. I want to just talk about one of the sort of upcoming policy program updates called the account adjustments. This one is really important because I think it's going to get a lot of people closer to that forgiveness finish line. So I just want to review with all of you what's entailed and what to expect. All right, so payment count adjustments, what are these? So these are a one-time initiative by the Department of Education to address historical failures in administering student loans. And essentially what it does is they're going to review every federal student loan borrower account, and they're going to award credit towards either income-driven repayment forgiveness and or public service loan forgiveness for any time spent in repayment status, certain periods of forbearance and deferment, and time spent in repayment prior to consolidation on consolidated loans. Now, this adjustment is currently underway, and the Department of Education will continue identifying borrowers eligible for full and immediate forgiveness regularly, so they don't have to wait to get relief. Otherwise, the Department of Ed expects to complete the full adjustment for all borrowers by July 1, 2024. Okay, so that's when it should be complete. Now, here's the great news, and this is why I was excited to tell you all about this, is that the Department of Education estimates that borrowers will receive at least 3 additional years of credit towards loan forgiveness, and many will see their loans forgiven entirely as a result. So I want you to think about it like this. After these adjustments are completed, you are likely to receive on average about 3 additional years of credit towards that 10 years total that you need for forgiveness under PSLF. Add that to the 3+ years of credit that you will receive for the payment pause period. That's the period while payments were paused during the COVID pandemic. That's about 6+ years of additional credit without having to make a payment that you could receive. towards the 10 years total. That's putting you more than halfway to loan forgiveness. All right. So this is a big opportunity. And I want to make sure everyone is aware. Just already since last summer, the Department of Ed has approved almost $44 billion in debt relief for more than 900,000 borrowers. So some people are having their loans entirely forgiven. Others are getting a heck of a lot closer towards that forgiveness finish line. Now, just to dive in a bit more into the details on exactly what you're going to get credit for. So I'm going to go through these now. So you'll get credit for any month in repayment, regardless of whether those payments were partial or late, the loan type, or the repayment plan. Okay, so maybe you made some of those payments on the standard plan and not an income-driven repayment plan. That's okay, you'll get credit for them. You'll get credit for months spent at least 12 months of consecutive forbearance, or at least 36 cumulative months in forbearance. Okay, so normally under these programs, you don't get credit for months in forbearance. Now they're going to go back and give you credit at least 12 months of consecutive forbearance and or 36 cumulative months in forbearance. And then any month spent in deferment prior to 2013. Okay. And last but not least, any month in which loans were on an eligible repayment, deferment, or forbearance status prior to consolidation. All right. So again, this is exactly how this is going to work. And the Department of Education is going to review all borrower accounts and start awarding those credits. And it should be wrapped up by July. So what they've started with is borrowers that are eligible for full and immediate forgiveness, borrowers who've generally had their loans for the longest period of time. And then they are going to award those credits to all other borrowers. So you should see that in the coming months. Now, want to talk to you about some of the required steps in order to be eligible for these payment account adjustments. In order to receive the credit, all right, your loans must be direct loans or FFEL loans managed by the Department of Education. So if you have commercially held FFEL loans, Perkins, or HEAL loans, you will need to consolidate your loans in order to qualify, okay? If you have loans from different time periods, you should also consolidate those loans. Consolidating loans with different payment accounts will apply the higher count to your new loan. So for example, I'll use myself. My undergraduate loans from 2011 and my graduate school loans from 2018. If I consolidate them all together, okay, they will all take on the credit count of the loans from 2011. So obviously the loans from 2011, I've been in repayment for longer than the loans from 2018. And therefore I'd be eligible to receive forgiveness on the 2011 loans before the 2018 loans. Well, by consolidating them all together, they will all take on the credit count of the 2011 loans. And therefore I'll be able to receive forgiveness on all those loans as I would those 2011 loans. So for people with different time periods, right, different disbursement dates on those loans, consolidation is a must before this account adjustment takes place. Now, there is a deadline that I want to make sure everyone is aware of that they need to consolidate by. You need to consolidate by April 30th of this year in order to qualify for the payment count adjustments. All right, so again, I'm going to repeat that. April 30th of this year is when you must consolidate by in order to qualify for these account adjustments. If you don't consolidate by that date, you won't be included in the adjustments. So to reiterate, not everyone has to consolidate, just those with commercially held FFEL loans, Perkins or HEAL loans, all right, and those with loans from different time periods, it's going to be in your best interest to consolidate, right? Okay, we're going to take a quick pulse check. I know my team has been busy answering some questions in the Q&A. I'm going to take a quick peek. So someone asked, can Savi help us figure out if we need to consolidate our loans in order to be eligible for the adjustment? Carla, this is a great question, and absolutely yes. And I'm going to show you exactly how we do that in our next section right here, right? Okay, so I know that that was a lot of information to consume in one sitting. And it can oftentimes leave you overwhelmed, a little confused, and lost. Because while these programs can be very helpful, they can be confusing, and you can be left wondering which is the plan, which is the best plan for me, How do I know whether to consolidate, whether that's the right option? All of these questions are very normal, and this is exactly why Savi exists. So as I'm about to show you and walking through the Savi process, Savi's goal is to make your job as a borrower simpler and easier. And we do this by collecting some basic information, and then we're going to show you a personalized repayment and forgiveness plan. We're also going to monitor for new programs and policy changes, just like the account adjustments I explained to you right then. We're going to make sure that our tool, our communications to you are always alerting and updating you on the newest and latest in the world of student loans so that you can be maximizing your benefit and savings. Then we take on all of the heavy lifting and administrative burden for you. And we actually help complete all of the paperwork involved in this process. So the applications for an income-driven repayment plan and public service loan forgiveness, we pre-fill and digitize those, and we submit them on your behalf. When it comes to that employment certification form, we actually send that out to not only your current employer, NYU Langone, but any previous employers you might have had, and then submit that to Mohila on your behalf. And then we monitor the progress of those applications to ensure they achieve the desired outcome. So we're with you every step of the way. The best part about this all is that you are able to receive personalized one-on-one support from student loan experts like myself and like my colleagues who are answering the Q&A on this webinar as we speak. You are able to work with us at every step of the process to make sure that you cross that forgiveness finish line. And again, it really comes down to 3 simple steps. There's one application that you start with Savi to then produce and submit all of the other applications you need. You're able to see your best options when it comes to repayment and forgiveness, and then submit those through Savi and start saving. So to get started with Savi, you can sign in either using the QR code that you see on your screen, or you will receive an email after this webinar that's going to help you get set up with your Savi account so you can take advantage of all that there is to offer. I'll leave this on the screen here just for a second so that anyone wanting to utilize the QR code can. All right, and when you sign into your Savi account, the first thing you're going to see is your Savi dashboard. This is sort of like mission control for everything Savi. It's where you're going to be able to do a lot of different things and track the status and progress of your applications. It's where you can invite your friends and family to benefit from Savi as well. So again, this benefit is available to not only you as an NYU Langone Health employee, but your family members as well. So you can type in their email addresses and an email will be sent to them to let them get set up with Savi. Now, the process with Savi is fairly simple. There are a few different screens and steps where we're going to ask you some questions around your family size, your tax filing status, your income, and your employment. All right. This employment section is most important in helping us determine your eligibility for forgiveness. I highly encourage you to enter not only your current employment with NYU Langone, and you can see when you do so, you'll have an option drop-down menu here of all of the qualifying institutions related to NYU Langone, but any previous employment you might have had. We have a database in our system of all of the public service loan forgiveness eligible employers in the country. So when you start typing in the name of that employer, it should pop up in that drop-down menu. You'll be able to select it. And again, because this program is retroactive, I highly encourage you to add any previous employment you might have had. Once you've done that, the last step in the process is just syncing your student loans. We provide a loan sync through a technology called Plaid. It's a best-in-class syncing technology. If you have a Venmo account, you've used Plaid before. It's used in most financial technology applications these days. What it allows you to do is to select your servicer, so let's say Navient in this case, enter your Navient username and password credentials, and it's going to sync over a read-only snapshot of that data. So it's not going to give us access or anything like that. It's simply syncing over a read-only snapshot that allows us to see things like your balance, your interest rate, your loan type. And this is where it comes into play on how we're able to identify if you have a loan type that would require consolidation. If you do, we're actually going to flag that for you right there in the loan syncing process and then help you take the steps towards consolidation. So let's say you're leaving this webinar and you're still not sure if your loans qualify or what loan type you have. Not to worry, just make sure you sync those with your Savi account and we'll be able to flag those for you and help you with the next steps. And then once you've synced those loans, you'll reach the final step here, which is the plan options page. And this is where we show you exactly what options you have available to you. Okay. So you'll see here, this is someone whose best plan option would be the save plan. That's that newest income-driven repayment plan. So you'll see what their new monthly payment could be, $95 compared to $148 a month. Their total payment over time, so how much they will have paid in total by the time their loan is forgiven. How long until they would receive forgiveness, down to the year and month, okay? And then how much in forgiveness they would be eligible to receive. Now, they don't show it on this screenshot here, but they can expand below for more details to compare plans, see what options are available to them. It might not be just one, it might be a couple of different ones. And from there, you can decide which one you want to pursue. And that's where Savi's Essential Plan comes into play. So thanks to the generosity of your employer, NYU Langone, they have essentially made Savi's Essential Plan free for all NYU Langone Health employees for their first year. Not their first year at NYU Langone, but their first Essential Plan at no cost. So all you'd need to do is verify your NYU Langone email address in order to benefit from that Essential Plan at no cost. And that Essential Plan is really all of the features that I talked about, including application support, one-on-one assistance from student loan experts. So again, we're going to create your applications digitally, help submit them to your servicer to make that process simple and efficient. And then we're going to monitor those loans and track your applications to ensure you receive that forgiveness. And again, the best part is every step of the way, you can receive personalized support from student loan experts. So the one thing you're going to want to make sure that you do is verify your NYU Langone employer email if you have not done so already, to get that all at no cost. Now, just a bit more about what that essential membership looks like once you've verified that email. So you can see here on the left side, this is someone with 3 different employers, 3 different periods of employment. And with the click of a button, they can start that employment certification form, or ECF, and it will be sent out to their former employers for them to acquire that signature. That will be sent to the borrower to acquire their signature, so you, and then it will be sent to Mohila. And this can all be done within a few minutes. It really is amazing. Instead of having to print out these forms, take them over to your old HR employer, or send them via email, hearing no response. I mean, many people who try to navigate this on their own have a really difficult time doing so because it's hard to collect all these signatures and paperwork correctly. And then on the right-hand side here is an example of how we pre-fill those forms. So this is an income-driven repayment plan application. Again, you can do this from your phone. We have a DocuSign integration that allows you to electronically sign, and then it gets submitted to your servicer on your behalf. And then once those forms get submitted, you will be able to track them and monitor them all through one place. So you can see here on the left, this is someone with 3 employment certification forms all in progress, as well as their income-driven repayment application. So that's handling both their forgiveness element as well as their repayment form, okay? And then zoomed in here, this borrower can see exactly where they are at each step of the process. What might be still needed submitted on their behalf, what we might still need from the borrower, how long the expected wait time is, right? Again, all of this stuff is laid out because one of the most frustrating things that I find as a borrower is the lack of visibility that you have into what's going on with your servicer. And that's exactly where this Savi dashboard and monitoring comes into play. And then last but not least, our amazing customer support team. 2 of those amazing associates are on our call with us today and have been answering your questions. They are truly student loan experts, and you are able to contact them through your Savi account at any point in time. So you can click the contact support button. You can access our help center or send them a message directly about anything and everything related to your student loans. All right, so a couple of next steps here. First, you're going to want to make sure you create that Savi account. And again, verify your NYU Langone email address. Then you're going to want to complete your Savi application. This is going to allow you to then submit all those applications, get started on your savings, and get credit towards public service loan forgiveness. I guarantee many of you are going to find that you are a lot closer to full forgiveness on your student loans than you thought, based on some of the improvements and changes to these programs. So it's really in your interest to try to do this as soon as possible. And then if you have any questions, concerns, or issues along the way, reaching out to our amazing support team who is standing by ready to help you, right? All right, so I know we have about 8 minutes left here, so I'm hoping I can answer some Q&A out loud because I see a bunch of questions coming through, and I know our team has been diligently answering them. Okay, let's see here. What if someone doesn't work for a qualified employer? Can Savi still help? Absolutely, Savi can still help. We work with a lot of people who don't work for a qualified employer, and they can benefit from savings on an income-driven repayment plan and even potential forgiveness. So, you know, the person does not need to work for a qualifying employer just to benefit from Savi. All right, so the, excuse me, NYU does cover the cost for the first year. And then after that, I believe it is $70 a year. That is not a month, a year. And that is totally up to you, the borrower, if you would like to enroll in that essential plan again. But most of the heavy lifting, I will say, gets done the first year. That's when all of your prior employment certification forms will get submitted. You'll get enrolled on your income-driven repayment plan. So this is, you know, the first year is really the key year to get all of this done. All right, let's see here. All right, I'm going to try to see if I can find some more questions to answer out loud. Okay, let's see. Someone asked, should I enroll in a repayment plan if I'm enrolled in graduate school and my payments are on hold? So this is a good question. So if you're enrolled in graduate school, you're likely on what's called in-school deferment. Now, in-school deferment essentially puts your prior loans on hold, right? So you don't have to make payments while you are in school. However, it should be noted that when you're in school deferment, you're not accumulating credits towards public service loan forgiveness. So I would look into your options. You might be able to qualify for a very low monthly payment plan, and getting on that monthly repayment plan will allow you to start accumulating credits towards public service loan forgiveness. Okay. So that being said, if you were to able to lock in a low monthly payment, right, and start accumulating credits towards PSLF while you're in school and while you're working full time, you'd absolutely want to do that. So to whomever asked that question, you will definitely want to look into that. And the only way to get out of an in-school deferment is to call your servicer and manually ask to be removed from that status. Otherwise, you're oftentimes automatically put into that. All right, let's see here. Okay, someone else asked, what if in the in-school forbearance, you are also working full-time at a 501c3 and already have that period confirmed via PSLF? Will that qualify for the forbearance recount? If it's already been confirmed via PSLF, then you should be good to go. But generally, it's called in-school deferment, and that period does not count. That will not count in the forbearance recount. So if there was a period of forbearance, that's different than in-school deferment. So Barbara, I just want to make sure I'm answering your question correctly. All right, someone else asked, should I reach out to my servicer and inquire about stopping payment for this adjustment? So that will be automatic. So the payment count adjustment will be applied to your account automatically if you have the correct loan type. So you won't need to worry about that. So someone asked, if I were in an in-school forbearance during the COVID payment pause, does that time still count for forgiveness? Unfortunately, it does not. Those in-school deferment periods are really tricky. So I want to make sure everyone is aware of this. In-school deferment periods do not count towards public service loan forgiveness. You would have to take yourself out of an in-school deferment status and put those loans into repayment in order to be accumulating qualifying payments during those months towards public service loan forgiveness. All right, let's see here. I know we have a few minutes left. Happy to answer any and all questions that you guys might have. We hope that this was helpful. We appreciate any and all feedback. Let's see here. Oh, so does the COVID forbearance period count? Yes. So this is something I really want to review with you all. So the COVID payment pause, which began in March of 2020 and went through August of 2023. Okay. So that's about 43 months in total, I believe. If you were working for a qualifying employer during that time and you were taking advantage of the COVID payment pause, you are eligible to receive credits for all of those months. Okay, so that could put you essentially about a third of the way closer to full forgiveness without having to pay a dime. All right, so that is a really, really big deal and a really big opportunity. How do you claim those credits? The one way and only way you can claim any qualifying credits, which is by submitting the employment certification form. All right, someone else asked, what if I have already paid my loans from another school? Unfortunately, if you have paid down the loans to a balance of 0, you cannot have those reinstated to be forgiven. That is done. So once you've paid off the loans, they cannot qualify for any of these forgiveness programs retroactively. All right. Yes, that COVID period would also be for Parent Plus loans as well. Oh, this is another great question from Deborah. So Deborah asked, there were 2 months when my repayment plan was put into an administrative forbearance due to processing to change my loan payment into the save plan. Do these months count towards the recount? They do. They absolutely do. Anyone who has been put into an administrative forbearance, this has been happening a lot lately due to servicer delays with applications. Those periods should and will count towards public service loan forgiveness and income-driven repayment forgiveness. And again, for anyone who's asking, you will be provided a recording of this session via email. All right, someone else says, I don't have any loans myself or they're fully paid, but I want to use the service for my daughter. Should I continue with the application process? So you should continue with your application process, but go to your dashboard and invite your daughter to join via the invite friends and family. I'll show you really quickly right here. And 1 second. Yep, right here. So you can see right here, invite friends and family and send her an email. That way she can create her own account and she is able to utilize Savi with her own information. All right. And someone else, how can we hire you for assistance? Well, NYU Langone provides Savi to provide this assistance really for you. So you can take advantage of that. Again, that first year with all of those sort of premium level of support and service, all the applications, the one-on-one personalized support can all be handled again, right from your Savi account. And you can contact our support via email or telephone. If it's asking for a credit card, it's likely because you have not confirmed your NYU Langone employer email address. And so you're going to want to make sure when you go to your dashboard, when you select your plan, that you click and confirm your NYU Langone email address. And yep, you'll be provided a recording of this session via email. It should come through about 24 hours from now, so at some point tomorrow. All right. Well, thank you, everyone. We are just a little over time here. I hope that this was helpful and informative. We appreciate all of the feedback. And we look forward to helping you all with your student loans. So see a couple more questions here. We'll keep the Q&A open just a little bit longer. And let's see. Trying to type a few more answers here. Amy, if you consolidate with Earnest, unfortunately, that's a private lender. So those loans are now private. So they won't qualify for any of the federal repayment or forgiveness programs here. And Tanya, I'm going to give you the link here, NYU Langone Health.bysavi.com. All right. Well, thank you again, everyone. We're gonna wrap this up, but I know we'll be doing more in the future. And again, if you have additional questions that weren't answered, you can access our amazing customer support team through your Savi account. So we look forward to helping you from there. Thanks so much, everyone.